I think there are two primary explanations for that. The first is China, and every Indian fund manager's worst fear a year ago was that China would become investable again, and it has. And so I think that largely explains the selling by foreigners of India this year. I don't think it's because they dislike India, it's just that they see more upside in China. And then the second thing is that the earnings have clearly disappointed, and I think we're getting close to an inflection point with the earnings, not in this current quarter, because the GST cuts only really kicked in the last week of September. But going forward, the combination of those, the monetary easing, the income tax cuts, and a decent base, I think means that fiscal year 27 will get us back into double-digit earnings growth again, and then make India interesting for foreign fund managers once again.
How do you assess 2025 year, as for the global financial markets? This is excluding India. How do you describe how the year has played out till now?
In one word, surprising, because truth be told, if you had asked me how the global markets would be this year in January, I would have said that there was an over 50% chance they would be down. And here we are with the bellwether equity index, the S&P 500, up 17%, which of course is much better than the long-term average. Sorry. And I hope you can hear me better. So it has been a surprising year. Now, if I could rewind the clock, why did I think it would be a challenging year? Well, the most simple explanation is that the S&P was up 25% in 2024, and it was up 25% in 2023, so I just thought it deserved a break. And so here we are up 17%, and I know that sounds great, but what's even more incredible is the emerging markets as a whole are up twice that much. They're up over 30%. So Puneet, to answer your question, it's been a really surprising year, and that makes me somewhat uncomfortable forecasting next year, because I was thinking this was going to be a down year.
Okay. So, as you rightly pointed out about the US markets, Mark, they have made consistent highs all through 2025, whereas the Indian markets have done it just once, the Nifty at the benchmark level. So, would you say that the Indian markets have somewhat decoupled from the mothership, which is the US?
No, because what is the? Did you say how much the Nifty's up? It's up about, I think, 6 or 7% in dollars. I mean, I wouldn't be displeased with that. I think if you annualize it, it's sort of about, I guess, 11 or 12%. To me, that's a perfectly good return. So it's not like India's gone down, but clearly it's underperformed the US, it's underperformed its peers in emerging markets. And I think there are two primary explanations for that. The first is China, and every Indian fund manager's worst fear a year ago was that China would become investable again, and it has. And so I think that largely explains the selling by foreigners of India this year. I don't think it's because they dislike India, it's just that they see more upside in China. And then the second thing is that the earnings have clearly disappointed, and I think we're getting close to an inflection point with the earnings, not in this current quarter, because the GST cuts only really kicked in the last week of September. But going forward, the combination of those, the monetary easing, the income tax cuts, and a decent base, I think means that fiscal year 27 will get us back into double-digit earnings growth again, and then make India interesting for foreign fund managers once again.
So for 2025, what's your assessment of the Indian markets? Would you say that they were boring as markets such as China, Brazil, offered better risk reward, or were they disappointing because of tepid returns, or they were challenging given the lack of investment opportunities here?
So, I'm not really that old, but I've reached a certain age where I don't try to pretend that I know things that I don't. So I haven't really been following India that closely this year because we all only have so many waking hours a day, and like most other people, I've had to do a lot of catching up on China. All of a sudden, China's back on the map. And many of us, I must confess myself included, we haven't been regularly looking at China. We kind of wrote it off. And now it's come back. We've got a lot of homework to do. What's going on in China? Because they're making huge strides that none of us saw coming across the board in many high technology sectors. And so to answer your question, I mean, the honest answer is I haven't really been looking at India that intensively this year because I've had to do a lot of work catching up on China. But if you wanted a descriptive, yeah, I'd say it's been a rather boring market this year.
So in other words, you're saying that nothing much happened in the Indian markets to make you, wake up and take notice?
No, in fact, this has been, in my small career, something I've noticed that India actually tends to progress and take 2 steps forward when it's had a setback. Most obviously, back in 1991, but subsequently, every time something bad has happened, India tends to respond, in my mind, very positively. So I think that the tariffs will end up being a positive for India because they have resulted in significant monetary easing and significant fiscal stimulus. And so those are important things. I don't know how many rate cuts have there been this year, 5, something like that. And these big cuts in consumption and GST taxes, those are very meaningful. But if I have to put it in relative terms to what's going on in China, then I must confess it's just not as exciting.
So how would you compare a market like US and China? So is the US market nearing a bubble? Because we have seen multiple highs this year, and especially the Mag 7 stocks, the IT stocks. How do you compare US and China on this IT thing? Spending by companies on AI and the valuations at some of the stocks that they're trading?
Yeah. So, you could define a bubble in valuation terms or in technical terms. And I know it sounds hard to believe, but in neither of those could you qualify the US stock market today as a bubble on its own. Just look at the chart of the NASDAQ 100, which is the sort of technology sector there in the US. And where we are, we have not really substantially deviated above the long-term trend. The way the dot-coms did in 1998 and 1999, the dot-com bubble was something like 3 standard deviations above the long-term average price trend for the NASDAQ 100. And today we're less than 1 standard deviation above the long-term price trend for the NASDAQ 100. So that's the technicals. Now, of course, there are standouts like NVIDIA, which is up something like 15 times in the last 5 years. So clearly there are some stocks that look different from the NASDAQ 100. But then on the valuations, the Mag 7, their forward price earnings ratio is around, I'm going to give you numbers that aren't precise, but I'm going to say the 12-month forward PE for the Mag 7 is somewhere around 33 times, and the forward 24-month PE is about 23 times. So you compare that to the big 5 technology stocks back in 1990s, and up until March of 2000. So that would have been Microsoft, Cisco, Oracle, Nortel. Last one I can't remember, but anyway, doesn't matter. Those were on about 50 times PE. So we're not in a bubble. I know it sounds hard to believe, but if you just look at those two basic things, the chart and the price earnings ratio, I don't really think you can. We're getting toward one, but we're not really in one yet.
Okay, we're talking about AI, US stocks. So investment in AI by US tech, tech majors is quite huge, and India is still at a very nascent stage. So is that a worry point for you? Let's keep the trade deals, the tariffs, etc. aside, and the stock valuations. Is investment in AI or the lack of it by Indian IT companies a worry point for you?
No, to the contrary. The danger in the AI story is the amount of money that the hyperscalers are investing, which this year is, I just saw the numbers this morning, $375 billion that the big five hyperscalers will be investing in AI. And over the next 3 years, $1.1 trillion. So if you add those two numbers up, it's more than the German stock market in investing in AI that 5 companies alone are doing over the next 3 years. And the danger is that they don't get the returns. The AI will be very accretive for the entire economy, and many companies will benefit from it in enhanced efficiency and productivity. Their margins will go up, their returns on equity will go up. I would, but the companies that are doing all of the big investment up front, those are the ones where actually you have to worry if they're going to get the returns. For the broader economy, it's going to be great. We're going to ride on the coattails of this huge investment that these companies, hyperscalers, are making. For the hyperscalers themselves, it's very risky, but I can understand why they're doing this, because in any major technological transition, you go back and look at history, without exception, the legacy companies, if you want to call the incumbents, are very seldom do they make it to the other side. Just look at, I don't know, what can I use as an example? When we moved from trains to cars, how many of the companies that made the coaches and carriages and, in the railroads were able to transition into making cars? And the answer is none. Look at when we move from cellular phones to smartphones. Who uses a Nokia or Ericsson anymore? So I understand why these big technology companies are spending money like drunken sailors, because they can see, the history shows the incumbents never make it to the other side. So they're going hook, line, and sinker to make sure they've got a place at the table in what Sundar Pichai calls, as I'm sure you know, AI, he says, will be bigger than electricity.
So where does India fit in the entire world order in terms of pecking order for you within the emerging markets and a broader global context?
Yeah.
Would you say, is it a safe haven buy, or have we lost out to US and China?
No, you certainly haven't lost out. As I said, I think a lot of the benefits of AI will come to economies and companies just organically. You don't have to make the big upfront investment yourself. You can benefit from it, just like so many of us have benefited from the internet without having to make huge capex into it. And so for me, India is very special because I don't want to bore you with my background too much, but basically my entire career I've only done Asian stock markets, which is 33 years, and they've been terrible. They've been really bad compared to the S&P. I mean, $100 invested in China 20 years ago would be about $300 today. $100 invested in the S&P, compounding, the dividend would be close to $3,000. And so Sorry, I want to just say $2,700, so not 3,000. But anyway, $100 invested in India would be about $1,800. So it's been not as good as the U.S. That's because the U.S. is very special in that it has technology as its biggest sector, and technology has an ROE of 30%. That's something no other country in the world has. But India has been, relative to the other Asian markets, relative to other emerging markets, really a standout. I mean, $100, 2005, $1,800 today, that is an extremely good return.
So $100 invested now, a year from now, would be how much? What kind of returns are we looking at?
Well,
if you can segregate across, let's say, large cap, mid cap, and small cap, because mid and small caps is where the money is made. Do you expect these two segments to outperform or underperform the large cap peers over the next 1 year?
12 months, I can't make that forecast. But
2 years?
long term, I do believe that small and mid cap will outperform simply because they're smaller, so they'll grow more. But I would guess that India can return around 15% over the next 12 months, because my guess is that fiscal year 27 earnings growth will be about 16 to 18% for the Nifty. And so ballpark, I would expect the return to be about that much, because you know, the market, it is up this year, but it's not up that much. So it's not actually that expensive relative to its peers. So when you do see that inflection point, earnings growth starting to pick up again, then I think there is definitely room for a re-rating. And I'm already seeing, by the way, in the current quarter results, the number of misses is about half what it was in the previous 2 quarters. So I think about 20% of the companies that have reported so far have missed, compared to about 40% for the previous 2 quarters.
So your 15% return expectation largely would also mirror the kind of earnings growth we are likely to see in the 1 year, because earnings growth, I mean, markets typically mirror the growth in earnings.
Correct. Ultimately, I mean, there's a whole bunch of things that make share prices move, but to my mind, the number one thing that makes a share price move is the earnings of the company. And yeah, so if you get 15% earnings growth, as long as the market is not outrageously overvalued, which I don't think it is, then I think you could get 15% return. And maybe if you get some increase in the valuation that's assigned to India, it could be a bit more than that. But I wouldn't want to hazard that. So yeah, I think 15 is a reasonable
number to play with. Okay. So what is the next 3-year, 5-year driver for India? The earlier answers ranged from manufacturing to digitization to India's strength in services. Do you think it is hard to find a narrative now that can drive Indian economy and therefore markets higher from a 3 to 5 year perspective?
To be honest, Puneet, I hadn't really contemplated that. I will tell you simplistically, there's 2 things that I've found India has that are unique. And the one is something everybody knows, which is the very superior demographic profile. So now I got to get these numbers right, but no, I better not say any numbers. But for sure, there are more people in India who will enter the prime money-making cohort of 30 to 60 years old over the next 5, 10, 15 years than any other country by a huge margin. So it's just the fact that the working age population is larger than the dependent age population, and that happened in 2018 for India. If you look back in history at other countries, when you had that sort of golden demographic threshold crossed, where the working age population was larger than the dependent age population, it was always led by very good economic growth in the countries that I've studied, which are Germany, Japan, you know, in the 50s and 70s, and then Korea and China in the 80s. And so India did do that in 2018, and the working age population should remain larger than the dependent age population at least until around the year 2060. So this is a very long golden period I think we have in front of us, demographics. And then the second thing I like about India, if you don't, I have to butcher the Hindi language, I'm sorry. I think the word is jugaad. Jugaad, yeah. So I have no jugaad, by the way. That's why I'm always at the end of the line trying to buy a train ticket or something. As you know, I barely got my visa in time. Yeah, India has jugaad, and hard to quantify that, but we can qualify it. There's just there's a can-do attitude, which I'm sorry to say is absent from many other parts of the world. India has a can-do attitude, and that's very important.
So if the stock markets are a reflection of how the country's economy is doing to some extent, where are Indian markets right now? Have they overshot reality? Are they underplaying reality?
Well, you know, obviously there was an economic slowdown last year, and so that I think in turn explains the single-digit earnings growth. And coming back to my earlier observation, earnings are ultimately what drives share prices. So I think that this relative underperformance compared to the US, for example, where they're going to clock in probably about 13% earnings growth this year and another 13% next year, it's trading where it should be. Yeah, I think it probably is.
So one aspect that has kept traders and investors on edge over the past few months actually has been the trade deal, which still hasn't come through. What's your base case, bull case, and bear case on how the tariffs will play out for India, one, and its implications for the stock market? Can this 13% or 15% growth in corporate earnings and therefore the stock market be lower if the trade deal doesn't come through or the deal doesn't matter?
Well, first I want to say I'm very sorry for anybody who is in the textile business or the gems business or the seafood business. I understand they've been impacted, and I don't want to belittle that difficulty. But for the entire Indian market, and certainly, for the entire Indian economy and market, I really just think this is huge red herring and frankly irrelevant. I know it impacts. There are a lot of people employed in those sectors, but I just don't see the impact on the economy. I mean, exports to the U.S. are, 2 to 3% of India's GDP? I think it's a lot of hot air. And if I was to make a forecast about it, I think it'll improve. Seems to be most other countries there are certain countries that had to buckle to the American demands because they rely on America for their defense in Europe and South Korea and Japan. So they basically just said, okay, we'll do it. But other countries don't need to do that, and they are negotiating. And so India is one of them. And what I can say, I'll say two things. Number one, Trump makes it up as he goes along, so it's really hard to forecast this stuff. Number two, I do believe the Americans want access to the domestic market here, in particularly agriculture, particularly dairy. And as we know, that's an extremely hot potato politically. But I think they're serious about it. And so, I don't really know how to finish that sentence, but they can
give us a number.
They can see this is a huge market, and Americans, they like making money, so they obviously want access to this market, and I guess they'll just have to. I don't know how those two will meet. I can't answer it.
So on the policy front, Mark, do you think that the government has actually exhausted its policy-related ammunition, given the fact that we saw a lot of measures in the budget presented in 2025, and now with the GST slab rejig. That's one part. So looking ahead, can 2026 budget will not have much policy-related stops unless they are for stock market investors?
Puneet, like I said earlier, I've gotten to the stage where I don't want to try to answer things that I'm not really qualified to talk about. So policy in India is not my forte, but if I could find a way around that answer, which is circuitous, and I apologize, I've always felt that the attention on the union budget was vastly in excess of what it should be. I don't understand why everybody's so focused on this budget every year. I understand, obviously, policy at the margin is important for an economy, but to my mind, this is a capitalistic economy that has a very long runway. It looks great to me. So, I mean, if the best thing is just if the government could leave the private sector to do what it does best, which is make money, then I think the rest takes care of itself.
Probably lower taxes for foreign investors?
Oh yes,
that's
for sure. That's
on
a
our wish list.
major issue that India has is the capital gains and dividend tax for foreigners. It's I don't want to say that they don't deserve to pay any tax, but certainly most other emerging markets they don't have to pay those taxes, or at least nearly as high.
So assuming valuations become a little more attractive for foreign investors to put in money in India, would the higher tax slab for foreign investments, will it be a prohibitive thing? Assuming that the kind of returns one can expect from, let's say, a China or a US or another emerging market?
Absolutely. You know, I can't deny this is a thing. Now, I don't want to say that I think the government should not tax foreigners. It's not my position to say that, but it does make Indian stocks look relatively less attractive. Absolutely, you can't deny that.
So are there any worry points, according to you, which the markets have failed to read correctly, the Indian markets?
Worry points in the Indian market? Well, it used to be everybody was worried about oil. Doesn't seem to be a problem anymore. I think job creation is a problem everywhere in the world, including India. Young people need to be employed, and finding gainful employment is a challenge. We know that. This is not something unique to India, but I guess that would be the top of my mind, is job creation.
Okay. What you talk to a lot of companies also based in India. What are their pain or worry points? Is it demand not picking up? Is it taxation? Is it lack of inadequate infrastructure, policy framework? Is India Inc. worried about anything?
You know, actually, I have to be honest with you. I don't really talk to a lot of companies. My colleagues do, but I don't. I wish I did. I wish I had the time to, but I don't. I stopped looking at single securities around 15 years ago, so I just look more at the
Would you have
macro
any
level.
thoughts on how the commodity prices have played out?
Yeah.
Gold and silver,
Yeah.
and crude oil, for instance.
Yeah, I mean, clearly they've moved in opposite directions. There is more than enough oil in the world, and more than enough most other commodities too. There's lots and lots of it, tons of it. So I believe that commodities are basically in a very long-term bear market, which is great for the consumer, great for industry. Now, of course, the precious metals are completely different because they're not industrial commodities or soft commodities, and I'm a believer in them. I mean, gold, if you just go back 100 years, I apologize to the people in the audience who've heard this probably 10 times already, but there's this famous, I don't know what you call it, the price of a fine toga in ancient Rome was the same in ounces of gold as the price of a good suit today. So gold serves its purpose as a hedge against inflation, and if you just look at it over the last 100 years, it's returned about 5% per year in dollars. So it has a good place in anyone's portfolio. Now, we've just seen this huge increase in the gold price, and that is actually not really that unusual. I mean, the long-term average return is 5% per year, but it does have these spurts. So, you know, why is it just taken off? I think the war in Ukraine is the main thing, and not the actual war itself, which is horrible, obviously, but the confiscation of Russian assets was a terrible decision on the part of the Western countries. And now they're thinking about actually taking that money and giving it in loans to the Ukrainians. And that has deeply hurt the, what you would call the reputation, I guess, of Western financial markets. Many people just don't want to get their assets frozen, obviously. And I mentioned earlier about young people being challenged to find meaningful work in India, and this is a phenomenon all around the world. And the more you get this disparity in income, between the rich and the poor, and that is largely a demographic disparity too. I think the greater the temptation will be to impose wealth taxes, and the British are talking about a new property tax, which is a form of wealth tax. The French are talking about a wealth tax. In California, they're talking about a tax on billionaires, and all of these wealth taxes, it's been well proven, they just drive money away from the jurisdictions where they're imposed. And one thing about gold is if you keep physical gold in a vault in Switzerland or Singapore or wherever it may be, then it's hard for somebody to take it from you. So I think,
so in terms of price points, are we headed higher?
Okay, so we are, yeah. I mean, I think the maximum pullback in gold is probably $3,500 per ounce, which is probably around 7% below where we are now. And then I think it'll be up around 4,500 within a year.
Some optimistic scenarios expect the gold prices to hit $6,600.
Over time, yes. Yeah.
You think it's a possibility?
Yeah, I do. Actually, I shouldn't say this, but I will anyway. Here, I'm going to take off my gold ring. So scientists have actually found there's something very special about this metal for us that no other metal has. When it touches your skin, it produces endorphins. It actually makes you feel good. No other metal has that quality. So there's something about gold that really goes back, I think, to prehistory. Our relationship with gold is special.
One last question. For somebody who wants to invest in India now, wake up, it's time, it's the right time now, or you can, or should they look the other way? To US, China, other emerging markets?
I'm not good at sort of trading, so I don't know. I've never been able to sort of tell people when is the exact right time. But I mean, I think India's priced right. I think the earnings growth is going to be good next year. It's fine. I think I like to say it's really the only emerging market that a global portfolio needs. To my mind, you don't need Brazil, you don't need Indonesia, you don't need Turkey, but you do need India because it actually has proven, as I said at the beginning, to produce very good returns, which most emerging markets don't. And I don't see why that shouldn't continue to be the case.
Thank you, Mark. Now let's open up for a few questions. If anyone has, please raise your hand and keep it short and crisp.
Very good morning, sir. This is Vamsi, a co-founder of StatBiz Technologies. From the recent Global Wealth Summit, we got to know that there's a takeaway from the World Bank saying that asset building lending products are very much required to the world. So please give your sense of that.
I'm sorry, I didn't catch it.
Can you please be a little more specific? And
yeah. So
what's the question?
There's a takeaway from the World Bank saying that asset building lending products are the future of the world. So
asset building lending products?
Yes.
I don't know what they are, I'm sorry. I'm sure they are something important, but I don't know what those are. Sorry.
Okay, thank you.
Yes, please. Can somebody please give the gentleman the mic, please?
Hi, I'm Bhavik Khandar. Thank you for the presentation. Mark, I just wanted to ask you, since you are bullish on India, amongst the other emerging economies, which are the top 3 sectors that you would bet in India for the next 3 to 5 years? And why?
Well, I mean, I've never been that much of a sector person. I've always felt the companies are first and foremost, because you could have a good sector and a lousy company and vice versa. So nevertheless, you know, an honest question deserves an honest answer. And I can't give you 3, but I would just say banks, to me, are still a very good proxy for this economy. Banks are the heart of any economy in the world, and so if an economy is doing well, banks should naturally follow. I like the banks. I think there is organic transfer of assets into the private banks, so I like them. I think the consumer seems to me a very obvious thing to invest in here. The question is pricing and the quality of the companies. But anyway, banks and consumer, those would be my 2 ones. And there's a whole bunch of interesting emerging sectors here that, to me, look really interesting. And I'll just pick one out of a hat, but hospitality seems to me to be a very promising sector here. So there's a lot. I mean, one good thing about this market is it's very deep and broad. There are lots of interesting sectors to choose from.
Just one last question, please. Yeah.
Hi, Mark. This is Balram. Nice, listening to you. I just want to have an since you are very bullish, or rather you are very gung-ho about China, with reference to AI, we are hearing a lot about AI in USA and America, but we don't hear much anything in China. Since you have been observing it and closing seat from very close angle, can you update us what is happening on the AI front in China?
Oh, tremendous amount. There's a lot going on in AI in China. Maybe we don't read about it as much because the whole world seems to be so preoccupied with the Magnificent Seven. But it's a totally different architecture in China. And the difference is, in a nutshell, the Americans have extremely powerful chips, but they don't have enough energy, electricity to make them work. The Chinese have less good chips, but they have tons of electricity. So it's a different system, but the end result, I think, is the same. At the margin, I would say in China, you're going to get an even faster adoption rate of AI because their economy is already so much more digitalized. And I guess, for lack of a better word, monitored. I mean, everybody's information is collected all the time in China. And if you go there, you just see cameras everywhere. So there's so much more data that they can use that I think, AI is a big thing in China. And the last thing I'll just say is that the Chinese have no problem with this. I mean, a lot of Americans or Westerners, they don't like the idea of their lives being digitalized. They think it's an intrusion on their privacy. So rolling out something like the Aadhaar card in America or the United Kingdom is not easy. Well, in China, they have no problem with it. They don't have any choice. So anyway, AI is a really big thing in China. And we just don't read about it as much because everybody seems to be obsessed about NVIDIA.